Welcome back to the Wall Street Podcast. We are starting a fresh deep dive looking at the Wall Street Journal's market and policy analysis from Friday, September 19th, 2025.
That's right. And our mission today is really to quickly unpack the Fed's rate cut implications, also look at a huge tech partnership, and examine a major U.S. policy idea aimed at boosting manufacturing.
Okay, let's kick off with the macro view. Markets did hit fresh highs. NASDAQ up 0.9%. S&P 500 added 0.5%. But this buoyancy seems, a bit at odds with some of the job numbers. Initial claims dropped sharply, 231,000.
Right, better than the forecast.
Better than the 240,000 expected. Yet the average monthly job ads, they've been pretty sluggish, under 30,000 lately.
Yeah, and that's the interesting part. There's a clear decoupling happening here. Investors are betting heavily on the Fed's rate cut from Wednesday, the first one this year.
Signaling a shift in priorities.
Exactly. The read is that the Fed's moving away from purely inflation control back towards, supporting employment. And you see that sentiment driving the Russell 2000, the small cap index, up an impressive 11%.
Wow, 11%. Because small caps are more sensitive to the economic cycle.
That's it. Lower borrowing costs help them disproportionately. They're kind of the high beta play on this expected recovery.
Got it. Okay, speaking of big moves, let's shift to corporate deals. Nvidia, announcing a $5 billion investment in Intel shares, plus a big product partnership.
Yeah, huge news. And Intel stock, it just soared 23%. That's its best single trading day since, I think, 1987.
Incredible.
It's more than just cash, though. This deal is strategically designed. It's meant to really solidify Intel's core x86 CPU business, making sure their chips work seamlessly with Nvidia's GPUs.
Especially in data centers and PCs.
For those are the crucial markets, especially with the whole AI boom. It's a defensive move, really, to future-proof Intel against competitors.
Okay, so that brings up a question then. What's the main product focus of this Nvidia-Intel tie-up?
So Intel is going to design specific custom CPUs. CPUs engineered for, let's say, easy integration with NVIDIA's chips.
So it's about optimizing the whole package.
Precisely. A collaborative approach for better compatibility, better performance, particularly for AI tasks.
Yeah.
The idea for NVIDIA is it helps them defend their turf, maybe even win back some share from rivals like AMD by offering this unified high-performance stack.
Okay, makes sense. Let's circle back to the Fed for a moment. If they're easing policy, markets are cheering. Why is the 10-year Treasury yield still, relatively high, around 4.1 or 4%?
But remember, that yield already dropped quite a bit before the cut was announced. It fell from around 4.4% down to just over 4%.
Right, in anticipation.
Exactly. So the current level, sort of sticking around 4.1%, it reflects a shift in thinking. The market is now pricing in maybe a less risk of a really severe recession.
So if a deep downturn is less likely,
then the need for the Fed to slash rates dramatically again and again, it diminishes, right? That puts a kind of floor under how low bond yields might go from here. It's more about controlled normalization now, not crisis mode.
Interesting perspective. Okay, let's turn to policy then. What are the specifics on this plan from the Trump administration to revitalize U.S. manufacturing?
So they're considering using a very large investment fund, about $550 billion. This fund originally came out of previous trade talks, mainly for FX stabilization.
Yeah.
But now they're looking to repurpose it.
Repurpose it for domestic investment.
Yes, direct capital injections into strategic sectors. Think semiconductors, pharma, critical minerals, energy. And importantly, projects getting this funding might also get preferential treatment, like faster regulatory review, streamlined permitting.
That sounds like significant government intervention.
It is. And that level of direct involvement is already, raising some eyebrows, some skepticism among fiscal conservatives in Congress.
Right. And we see the ripple effects of these bigger shifts hitting consumers, too. American Express, for instance, just hiked the annual fee on its Platinum card, up to $895 now.
Yeah, clearly signaling they're doubling down on affluent customers, boosting those premium rewards.
And at the same time, you see regulators getting active. The FTC and several states are suing Ticketmaster and Live Nation, alleging illegal ticket resale practices.
That targets what they claim are billions in hidden consumer costs. It definitely addresses a long-running public frustration about ticket prices and access.
So we've really covered a lot of ground. A pretty rapid shift from the Fed, major tech realignments, and the significant government push on industry.
That's right. It's a moment where capital allocation is shifting fast, driven by both corporate strategy and macro policy changes.
Okay, let's leave our listeners with a final thought to chew on. The business world, especially industrials, they've wanted streamlined regulations for ages. But what happens if this factory revival push ends up favoring politically directed, money specific companies getting funds instead of just simpler rules for everyone? Does that change the whole risk calculation for major infrastructure players? Something to consider.